right time.
Good afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. Well, these are the top headlines that we're tracking at this hour. It's a subdued start to the September series. The Nifty trades around the 11,650 mark, and most sectoral indices today trade with cuts. IT and pharma indices are the only sectoral gainers after the rupee makes another record low of 71 against the US dollar. Yes Bank falls the most in 10 months after the RBI grants the extension to MD and CEO Rana Kapoor till further notice. The stock is also the top Nifty loser for the day. And a Bloomberg poll of 42 economists pegs India's first quarter GDP to come at 7.6%.
Well, viewers, thanks for tuning in to Countdown. My name is Dheeraj Shah, and the market's lying absolutely flat. It's almost a repeat of what happened in trade yesterday in terms of the flatness of the move. Yes, we have come off a little bit from the highs of the day. So we started off okay, reasonably well, I would say, and post that has come back. But just don't get fooled by this large peak. It was not as if it was a 1.5% move. Hardly a move there, and now very, very quiet. Similarly for the Nifty Bank, started off slightly lower, then went up a little bit, recovered a little bit, and then has pulled back, and now lying absolutely flat as well, about 1/3%, so nothing to write home about really. What about specific pockets? Actually, first let's get the market breadth, and then we'll get in the Nifty heat map going. Just pull up the advanced decline ratio. That too is not giving any kind of big cues in the session today. European markets maybe, and then the heat map. Just see what the rest of the world is doing before we focus full tilt on our markets. Let's get the FTSE CAC DAX up on your screen. Precious little, actually, a bit of red on the screen. So the world market's not too happy a place. It's an important day today, remember. Canada, US, and that whole North American trade agreement and those conversations, whether those happen, run up to what would happen on the Chinese $200 billion worth of tariffs as well. So important next few days to monitor. But the heat map, and when we started off, it was even Stevens. We was almost even Stevens. The Bajaj Finserv, Bajaj Finance, so the Bajaj twins are down. Yes Bank is the principal culprit, but I still believe the last 3 or 4 days that one sore spot for the market has to be Reliance Industries, and that stock is down another 2.5% in the session today. I think this week, if you look at the weightage of points that the individual contributors have put in, Reliance Industries would be right up there on the losers list. What's gained today though? Technology and pharma. Exporters have done really well, and we predicted this at the start of the trading day. With the rupee doing what it is doing, there's a higher probability of there being defensive nature of buying in those names. And look at the top row: Lupin, Dr. Reddy's, Tech Mahindra, Sun Pharma, HCL Tech, Wipro, Cipla. It's just 7 out of the 10 names belong to the IT and the pharma pack. It's no surprise those stocks are doing well. Very quickly, before I hand it over to Navneet, just 2 or 3 pockets that I want to highlight. Newsmakers, market movers from the broader end of the spectrum before she talks about what's happening in the more liquid universe. Wellspun India, J Corp, CCD amongst names, slightly indifferent names which are buzzing in trade today and on decent volumes too. So there's one set of stocks which has done well. There are of course stocks in news which have done well. There are companies which are down in the session today as well. So those will also come up on your screen. This is just the first set of stocks. They're doing well. 52-week high includes companies like Kaveri as well as Glenmark Pharma. So the pharma buzz continues the broader end of the spectrum too. And moving on, the next set of stocks are the companies which are in news. So PNC Infratech as well as HCC, I would have added a little Buildcon here too. So infrastructure as a pack is doing, is at least in news and moving as per what the news flow was suggesting. Navneet, how is the more liquid universe looking like?
It's a subdued start to the September series after the last two series have been pretty good for the markets. Nifty's rallied more than 1,000 points in the July as well as the August series combined. So currently, the open interest for Nifty futures is up 6.5%. Premium is intact, so that's not bad at all because the futures are still trading with a high premium of almost 50 to 54 points. The Bank Nifty futures have also seen some sort of build-up in today's trading session. In fact, open interest for Bank Nifty futures too has gone up almost 9% higher, sitting with premium of almost 155. Just to highlight, we've started the September series on in terms of open interest for Nifty futures. It has been on the higher side. This series we've started with 2.37 crore of OI compared to 2.1, which was seen in the last series. What range to expect then? Look, if you look at the options data, the maximum open interest is on the 11,800 call, and today it's moved to 11,500 put from 11,400. So that's the wide range probably you can look at, but clearly the next mark to be watched on the upside will be 11,800. And a lot of out of the money call option strikes have seen OI build up. So 11,008 has added 8.5 lakh shares, 900, and also the 12,000 strike has seen open interest addition of between 4 to 5 lakh shares. Whereas on the put side, writing has been seen for the 11,600 strike. That's the first support actually the market will be watching out for. Currently in the index is somewhere about 11,660. Let me quickly take you through three stock futures. Lupin, remember all the pharma stocks are doing well. In fact, the top 3 or 4 gainers on Nifty are also the pharma companies. The stock's up on decent volumes today, so that's a very good sign. On the future side, we've seen some fresh long build-up, open interest up nearly 12.5%. Yes Bank on the other side is the top loser among the Nifty constituents. The stock's fallen in very high volumes. In fact, the AVAT function of Bloomberg will tell you the projected volumes for the day. There you go. The white line is today's volume, projected volume vis-a-vis the average volume that one has seen in the last 20 sessions. Just to give you a picture of the volumes, almost 6.2 crore shares of Yes Bank on NSE have been traded vis-a-vis 2.8 which were traded yesterday. So the volumes are more than double of yesterday as well. Significant surge in open interest also seen. So fresh shorting at every level may be seen for Yes Bank. And lastly, I just want to highlight Kaveri's seat. The underlying is not up too much, but the stocks hit 52-week high, and there's a lot of interest seen in terms of the open interest build up today. So at 52-week high, the stock's seen fresh long position, open interest up nearly 16%, Neeraj.
Well, let's now get you some news stories. Our research team members are here with the newsmakers of the day. Darshan, Saloni and Nitin joining in with the top movers and the reasons thereof. All three of you, good afternoon. Thanks for joining in. Let's start with Piramal Enterprises, which held an investor meet yesterday. What are the key takeaways from that, Darshan?
What happened was Ajay Piramal himself was there, and a lot of individual heads, they were the ones that were, answering all the queries as far as the investors were concerned. Basically, the first part they spoke about was basically the financial part of the business. They're saying that the Shriram group of companies have given them an IRR of 16%. So the value that they had invested was close to almost 4,500 crores, is now worth almost 10,000 crores in the company, and they have almost 20,000 crore equity exposure to the financial services business. As far as their targets are concerned, basically what they're saying is their targets currently are improvement in return on equity ratio and quality of assets for the company, and over a set period of time they believe that the ROEs could come in the range of almost 20% for the business. They're saying that the addition of new products will continue into the financial services, wholesale will continue to be the key driver of the financial service business, and retail will go in beyond the housing finance of the company, probably even exploring ways of getting into the consumer finance business. That's what they said. Syndication will be one of the key drivers for fee income, and they're looking to maintain asset qualities at a very low level at 0.3% of the GNPA. As far as the real estate business is concerned, they're saying that the loans given are only to tier 1 developers, and that is why they are able to maintain their asset quality. And finally, they're saying that the midterm demerger now depends on a requirement as far as cash flows on the company. So basically, strong comments coming in from the management. Obviously, the pending demerger, which again was spoken about, the management did say that it's being considered, but nevertheless, the counter up almost 4.5-5% on the back of strong management commentary.
Thanks a lot, Darshan, for that. And we've seen good gains coming in for Piramal Enterprises for the week. Remember, the stock's up almost 12%, and some buying interest has been witnessed for this one. Moving on, following the Supreme Court order, insurance regulator IRDAI has made long-term motor insurance mandatory. Saloni Dhanuka joins us with more details on that one. Saloni, over to you.
So Navneet, buying a car or a two-wheeler from tomorrow will become expensive as long-term third-party insurance cover has been made mandatory by IRDA. According to Supreme Court order, the third-party insurance cover for new cars will be for 3 years, while that for two-wheelers will be for 5 years as compared to 1 year currently. Now, the main objective of this move to make insurance cover mandatory for two-wheelers and for cars is largely because of high drop-off rates that we have seen of late. Generally, according to a CLSA note, generally people stop renewing their insurance policy after the second year. And just to put things into perspective, drop-off rates for two-wheelers are as high as 75%, and for cars it is nearly 55%. Now, this move is likely to be beneficial for general insurance companies given low insurance penetration in India. Insurance penetration for two-wheelers is roughly just 25%, and for four-wheelers it is nearly 60% as compared to global benchmark of 90%. According to an HSBC note, they believe that this move is likely to benefit vehicle manufacturers and banks, while this could turn negative for online distributors as well as agents. And lastly, for insurers, they believe that their premium rates could go down as they will compete with each other to lock in customers for a longer tenure. Navneet.
Okay, thanks for that, Saloni, and that's an important one, and we'll of course be talking about this on Monday with a slew of experts as well. But Yatin, what are brokerages making of the RBI verdict on well, Yes Bank and Rana Kapoor? Because the stock market reaction, if it's to be seen, the market isn't too happy.
Clearly, Neeraj not happy, and more importantly, this was a conditional approval which was granted by the RBI, and that is the interpretation of the market. Now, just to get you through the brokerages, first of all, most of the brokerages are of the view that Rana Kapoor has been the founding member of the bank, and probably his position being uncertain in the bank would lead to some bit of investor panic. And more importantly, when the bank is sitting on single-digit capital adequacy ratios moving forward, as the bank grows, there will be a requirement of fundraising. And if Rana Kapoor is not in the position of CEO MD, or there is no kind of clarity on the management bandwidth, then all of these fundraising plans go for a toss. Now, if you look at the brokerages, we have a couple of them. Starting with Jefferies, they say that the reappointment of Rana Kapoor may not be a clean one, and probably that is the reason why markets have turned panicky. In fact, they say that the Rana Kapoor has created a franchise, and the prominent challenge in their opinion is given the fact that the capital position without visibility in the top management continuity is something which will be a hangover on the company. Morgan Stanley says that they had a base case expectation that Rana Kapoor extension would be done without subjectivity, but that base case even has been under question mark, and probably this could lead to some short-term volatility until a final RBI approval or clarity emerges. Citi also, on the other hand, believes that the kind of communication which has been made on the stock exchange is negative for the stock. In fact, they are opening a 30-day negative catalyst watch on Yes Bank due to the uncertainty around the continuation of Mr. Rana Kapoor as MD and CEO of the bank. And finally, we have Macquarie, which believes that this is clearly anything short of a full 3-year term of Rana Kapoor, and probably this would remain as a negative overhang on the stock price. Of course, they believe it's best to wait and watch for now rather than talking about any kind of speculation. And finally, Macquarie says and believes that the planned $1 billion QIP at the end of the year and the future growth prospects would go into a limbo, and probably that is the reason why the stock is reacting sharply, almost negatively, reacting to news down 7% in intraday trade.
Thanks a lot, Yatin, for bringing all those details.
The volumes, no need.
The brokerages, yeah. I think we were just talking about the volumes. It's bizarre. It's more than yesterday's volume, by the way. It's, I think on NSE, 6.5 crore shares have been traded. Yesterday, it was just about 2.8 crore. And there you go. That's the AV80 function, which is projecting today's volume. So it's fallen on very high. It's fallen
on high volumes, not surged really. The volumes have surged. The stock has fallen.
Volumes have surged, yeah, sorry. But that's not a great sign. And we've seen a lot of shorting. I just want to pull up the futures again, though we did talk about it, the open interest build-up is quite significant in today's session. In fact, the stock features among the top open interest gainers also for the day. So watch out. A lot of shorting seen on Yes Bank. But shifting focus now, and let's talk about Sadbhav Engineering. Actually, after the company has received a letter of acceptance from the MSRDC, and the value of that road project is somewhere about 1,620 crore. Let's get more details actually with regard to this order from Nitin Patel, who's the ED of the company. Hi, Mr. Patel. Good afternoon to you. Congratulations on this order win. If you could give us more details of this, when do we see revenue recognition from these orders being reflected in your financials, and also what sort of margins are you looking at?
See, fine. This is a part of this Mumbai-Nagpur Expressway project, actually. So this project, what we win, actually, this is a total length of almost around 43 kilometers. And this is a 8-lane super expressway between Mumbai and Nagpur. So obviously, this is a very prestigious project. And the construction of this project will start actually from Q3 onwards. And the construction period is 2.5 years as per the contractual terms and conditions.
Okay. I'm guessing you briefly mentioned about the IRRs. Just wondering if the nature of the IRRs on this project or any of the other projects have changed over the last 12 months, Mr. Patel?
See, obviously, this project, what we won actually, that is higher than almost around 18 to 20% higher than the estimated cost of the MSRDC. But in terms of the margins, broadly, we can say that this may generate at least 100 to 150 basis points higher than what we are basically making on an average from the EPC contracts in highway sector. So we can say that it may be between 12.5 to 13% in terms of the absolute IRR, EBITDA for the project.
What leads to such high numbers? And I'm guessing you are the lowest bidder, so other companies have bid for even higher. How is it that this is happening?
See, actually, this is during the basically estimation stage. Basically, it was not envisaged by the MSRDC has worked out only the bituminous road. Later on, they have changed the configuration from bitumen to concrete road, and also to make it access control. So they have changed the specification to give a basically barricading across the both sides of the highway for a full length actually. So definitely this will further go up actually. But on an average, based on the revised estimate, considering all the cost parameters and everything, what we are of the view, the cost has been worked out by the MSRDC. It is little bit low actually as compared to what we have bid.
Mr. Patel, so there are two orders with construction period of almost 30 months, and your press release says, as per terms of RFP document, the company is eligible only for one project as determined by the authority. What does that mean?
See, actually, there are the two back-to-back projects were there, and the contract specifies right from the beginning that if somebody is lowest in both, actually, so authority will give the order for any one which suits basically them. So definitely when the margin between L1 and L2 is higher actually in some of the projects, so that will not come to us. We will get when margin is little bit less. So this was the original contract conditions, but in both the projects we are lowest bidder actually. So authority has to decide.
You've won both the projects and you've been declared as L1 bidder.
Yes.
Okay. Could you talk to us a little bit on your debt picture? I believe last year you had total borrowings of nearly 1,332, which did go down if I compare it to FY17. What's the debt repayment schedule for FY19?
See, actually, the big change what we are envisaging that the construction business as compared to FY17 and 18, the large number of business was coming from the EPC segment order book. So obviously there is the debtor cycle is a little bit higher than the hybrid annuity mode. So in FY19 and 20, we are completely shifting from the EPC to the hybrid annuity execution. So definitely this will further improve the working capital situation, and that will bring down the debt also. And largely speaking, the orders what the company has won actually, so where we are going to get almost more than 800 crores of the mobilization advance fresh actually. So this will further improve the largely liquidity position. So that entire money is not required to basically working capital for executing this project. So this will be helpful for reducing the debt further for FY19.
You're talking the current projects which you've won, both of them, you'll be getting advance of 800 crore.
No, this not two. All put together, we are yet to receive the 800 crore in FY19.
By when exactly? Will it be scattered throughout the year, or is there a deadline to it?
See, actually, the way it has been scattered, so from this month only, we are going to get almost 100 to 110 crores. So on an average, every month, we are expecting that it ranging from 80 to 120 crore, the advance will flow within the system.
Okay. Mr. Patel, for an infrastructure company to have debt is normal and desirable as well. But what are the levels that you're looking at? I believe your standalone net debt or standalone debt declined a little bit in Q1 to about 1430 crores versus about 1485 crores. But I'm guessing these would be at par, the kind of numbers that you would want to keep?
See, actually, if we see the at Sadbhav Engineering level, the almost around close to 500 crore has been given by Sadbhav Engineering to Sadbhav Infrastructure, which is a subsidiary, and this has been given over the period of last 6 to 7 years actually for the purpose of the developing the infrastructure projects by Sadbhav Infra. So what we are looking at as and when this is being paid off by Sadbhav Infra, so that we are targeting to close by the end of this year. That's what we have internally targeted. So if that is getting settled, the debt level at Sadbhav Engineering will come down to almost around lesser than 0.4 leveraging, which is a most ideal situation for any construction company. That is what we are looking for.
So you're saying your subsidiary will pay off 500 crore this year of debt?
So that has already been planned. So as the Sadbhav Infra, there is an obvious plan to monetize some of the assets actually. So we are already basically on to basically start churning the assets. So this will basically deleverage the company at both the levels.
And what are those assets, if you could share some details?
See, Sadbhav Infra today is having 12 operational assets across the country. So out of 12, 10 are the toll roads and 2 are the annuity projects. And all 12 put together, the company has infused almost around 2,300 crores of the equity over the period of last 8 to 9 years actually. So once it is getting basically unlocked along with the premium, so definitely this will be utilized for the purpose of the repayment of the facilities what the company has taken for the developing all these projects.
Okay. Mr. Patel, I have one final question. I asked you briefly about the IRRs and the EBITDA margins on these projects. Now, as I look at the last 5 quarters, or if I look at the last 5 years, the last 5 quarters at least have been steady at this 11.5 mark. On an odd quarter, you've gone up to 12.5. Could there be a new normal for margins over the course of the next 2-3 years? Would your overall EBITDA margin level move up to 12.5-13%?
See, actually, if I contemplate that, if you see that during last 5 to 6 quarters, we are completing the EPC projects as well as some of the legacy irrigation and mining projects. So if you see during the last 5 to 6 quarters, we have almost completed 15 odd projects during those periods, which was generating little bit low margin. And during last basically 2 to 3 quarters, the significant business has been added from the highway sector and largely from the hybrid annuity also. So where the margin basically is obviously little bit higher. So as and when this execution will continue, so we are expecting the margin level definitely will improve on a base as compared to what we have generated during the last 5 quarters actually. So going forward, we are quite optimistic that we should be above 12% on a consistent basis for almost around 8 to 12 quarters during the execution of all the current order book, which is largely from the highway sector.
Here as well, you would clock in about average of 12%.
Yes, that is what we can basically as of now confirm that. Right.
Okay, Mr. Patel, we'll leave it at that note. Thanks a lot for joining us today and taking us through the details of the orders that you won, and wish you all the best.
Thank you so much.
That's the management of Sadbhav Engineering, also mentioning that they will be getting some 70 to 80 crore every month, which will reduce their requirement for working capital, and that's towards the orders they've won. So that's the advance money that they would be receiving, and they do look to scale down their debt from current levels. The subsidiary, that's Sadbhav Infra, to which they've lent almost 500 crore, they're looking to close that debt via monetizing some assets. So watch out for this one. The stock was up, maybe a news of order win, but it's cool cooled off from the day's high. And also the markets have recovered a bit. Just want to switch focus. Nifty is now down only 9 points, and Bank Nifty is back above the mark of 28,000 right now, trading with cuts of 85 points. And the broader markets are now trading in the positive territory. Both your Nifty mid-cap as well as the small-cap index have seen some green ticks coming about. But let's move on. Mahindra CIE intends to grow at 15 to 20% over the next 3 years. Speaking to us earlier in the day, Mr. Luthra explained the company's acquisition strategy and also explains the rationale behind the same. Listen in.
So, all over the world, there's a tendency to shrink the number of vendors, consolidation. We'll benefit from that. The other thing that's very interesting is that look at the model that Mahindra CIE has created. I'm the chairman of a company which is majority owned by the Spanish
partner.
But there is nobody here who is spending more than 7 days a week. We look at Billforge, the acquisition we made, no changes, same management. We have the right to change, but they don't change it. Okay? It's a very interesting model because what has happened is that the cousin generation of auto component manufacturers, their kids, the second generation, okay, don't necessarily want to beat metal in India. So they want to work for Bloomberg, they want to work for people who are at the in the IT space, in the fintech space. So a number of first generation people who are now getting into their late 60s and 70s are saying, my son doesn't want it. I don't want to part with it. It's my legacy. What we are saying to them, sell us 51% and continue to run the company. You need capital? Take it from us. Don't take on more debt. So the acquisition strategy is still very much partnership. The growth strategy is still very much partnership.
Yeah.
And the other thing that is beneficial to, they're saying take a choice. You want cash, take cash. You want stock in your own company, keep stock in your own company. You want the option to merge it upwards into CIE to get, Mahindra CIE to get liquidity, take that. Do whatever you like, okay, but don't hold back on growth because your son is not there.
Yeah, well, I remember certain conversations in the past as well, Mr. Luthra, how Mahindra CIE acquisition happened, but Mahindra is the first name and CIE is the second name. Or for that matter, the German company that you acquired a few years back, wherein the promoter was sobbing about giving it away, was comfortable giving it to you as opposed to anybody else. So where does...
The only problem with all this is that I'm in danger of being on the wrong side of my wife. Because she says that I said yes to you in 18 months and these people are saying 24, but you're still wooing them.
Okay, well, interesting. Let's talk about what does all of this, Mr. Luthra, do to the growth prospects in numbers, and how large do you become? I mean, I'm talking about really what will happen the next quarter or this calendar year. Let's assume 10-15% would happen. But my point is 5 years out, how much of a multiple from the current size do you expect Mahindra CIE to be at? Combined organic and inorganic growth.
See, I think you and I will get arrested if I start giving numbers.
No, okay.
So we have
just
to,
estimates.
our thumb rule is, okay, we have to grow 50% faster than market.
Okay.
Okay, our competitors. Because we are well capitalized, we don't have any, we don't have any constraints in terms of the ownership. Okay, and second thing that we have to make sure is that if CIE is running Europe at 15-16% EBITDA, okay,
you have to reach there.
I am running at 14%, and okay, maybe I have to reach that also. If CIE is running at 15% EBIT and therefore appropriate ROC of close to 15, north of 15%. And I'm running EBIT 11, not 15, and I'm running ROC 12, not 14. I have to reach that. Okay. I think we have to look after the bottom line. Okay, the top line will happen because of customers which will come to us for consolidation. Having said all of this, because you will not let me get away with...
No, I'm not asking you for a specific number. I'm really asking about what's the size...
I'd be disappointed that if we could not hit... keep up this pace for at least another 3 years, which is therefore our what do you call budget. But the budget is like a 15-20% growth rate. Okay, This year we've been fortunate that it has been 26% year on year. So I don't think I can keep up with 26%.
Okay, let's move on and get you some market views also going. We're joined by Manav Chopra of Indiabulls Ventures, and also on the fundamental side, we'll be joined by Gurmeet, Chadha, CEO and co-founder of Complete Circle Consultants. Good afternoon to both of you gentlemen. Manav, let me come to you. The trade has been subdued this Friday. It's the start of the new series. Do you foresee more consolidation in the coming trading sessions?
Yes, that's quite possible. You know, the markets have already witnessed a good series of rally with very brief corrections, and it has been more than 1,000 points rally with any a good correction in the markets, and most of the indicators are already in the overbought zone. Looking at the Bank Nifty also, which is into a consolidation phase, I think the markets would enter into a short-term consolidation, which could also be witnessed with some brief correction, but eventually, until unless we don't see a break or range breakout in the markets, till then this consolidation is likely to continue. So for Nifty on the lower side, 11,600 are the important support zone, and for the Nifty on the upside, 11,750 would be the resistance level. For Bank Nifty, 27,800 are the support, and the resistance at 28,350. So in Bank Nifty, and Nifty has also formed a negative divergence, wherein the Bank Nifty has not formed a new high compared to Nifty. So as long as these divergence pattern continue in the markets, this time correction would continue, and we need to see a close above the resistance level for any fresh momentum. So at the current zone, I think it's time that one can look to book some profits on the index level, and there will be some stock specific action which will eventually keep happening in the markets going forward.
Sarvendra Srivastava, independent market expert, with us on the show as well. Sarvendra, good afternoon. How are you approaching trade today?
Good afternoon, Neeraj. No, I think today's trade more or less last 1 hour, so nothing much should happen. The overall view, though, will remain that we might get into a small little correction. So I would also believe that the markets have run up, and so many parameters, the market looks overbought. And just like Manav was saying, that there's a divergence between Nifty and Bank Nifty, I'll tell you a divergence coming within the Bank Nifty itself. The highest weighted stock, one of the highest weighted, which is HDFC Bank, has not been participating in the Bank Nifty rally for the last more than 1 month now. So Bank Nifty sequentially had a few new highs last 15-20 sessions, but HDFC Bank failed to confirm any of those new highs. So such a large cap weighted stock and all-time darling and favorite of the markets, and now it's also giving that subtle minute divergence with the Bank Nifty itself. So when we add up all this, you definitely see that it's difficult now. So we are all probability guys. So the probability that you have a sustained breakout from here before you have a correction has now kind of diminished. So you should have a small little brief correction. I think 11,500, 11,550 thereabouts should be a target going forward for the Nifty spot, and could take around 4-5 working days. And anybody wanting to take that trade should be also taking a stop loss above the highs that we have printed day before. And I would say that I will keep a stop loss at 11,776.60 on an hourly closing basis on the Nifty, and would like to probably go short for the next 4 to 5 working days.
Okay. Manav, let's come to your stock recommendations for this afternoon.
Yes, my first buy call is on Reliance Capital. The stock on the monthly charts has taken support at its 2 years rising channel formation, and recently, after a brief good correction from its recent peak of 780, the stock has also seen a breakout on the daily and the weekly perspective. So as we look at on the oscillator's point of view, the prices are bouncing from its oversold zone from a high time frame charts, which is definitely providing a very good margin of safety. And at markets which are at 11,700 levels, one has to look out for stocks which provides a good margin of safety, and keeping that in play, a risk reward ratio is also favorable. So 430 is the stop loss for Reliance Capital. We expect a good upside into this for targets of 550. My second call would be a buy on Castrol Industries. In fact, the stock has been an underperformer since quite some time, and on the weekly perspective, there is also a small double bottom formation with divergence positive divergence on the momentum oscillators, which is hinting for a good bounce back from the oversold levels. 155 is an important support zone, and we recommend a buy into this. Maintain a buy on dip strategies with a stop of 153 and expect an upside target of 175.
Sarvendra, what about you? Your stock bets this afternoon? Sarvendra, that's for you. Your stock ideas? Okay, I think there's some problem with the link with Sarvendra. We'll touch base with him. Let's meanwhile go across to Gurmeet and find out what he's currently doing or rather advising to his clients currently in the markets. Hi Gurmeet, good afternoon and thanks for being patient with us. What's the view, Gurmeet, at these higher levels? Though last 3 trading sessions have been more about profit booking at higher levels, but definitely, you know, there are some pockets which are bouncing back from the likes of Pharma. Pharma is doing pretty well. In fact, across the board, we are seeing some bit of buying coming back.
Absolutely, Gurmeet. When everybody is cautious and everybody is giving a consolidation call, and people have been doing that since 10,500 Nifty, it doesn't come. That's why markets are markets. So we are seeing now, some value hunting in the market. Which I am not necessarily convinced of. So you're seeing pockets which haven't done well now, picking up, whether it is pharma, whether it is some of the, infrastructure, capital goods stories, some of the corporate lenders. So this is a classic dilemma. What is attractive is expensive. What is valuable or what is looking cheap. The earnings haven't really yet caught up. So I personally think that index investing should be avoided. I think there's no point looking at the broader indices, because even on the upside, it's not been broad-based. Similarly, on the downside, it won't be very broad-based. So there are pockets. Where you think that if you were to take a slightly longish view, which is 3 years kind of a view, I think there are still opportunities.
Okay, I think we've got Sarvendra back with us. Hi, Sarvendra, if you could hear us. I was asking, what are the stock bets that you're taking this afternoon?
I would go with 2 buys and solitary sell. The buys are, the first one is from the banking space, which is Indian Bank. I think clearly the stock has come back towards a good support area to 320, 330 has been a good base for the stock over the last many months now. So my sense is that we are now currently trading just around those levels, just probably taking support around that band, and the next leg up probably should take us back towards 345, 350. So a trading call here on the buy side with a target of 345. Stop loss kept at 322.40. Hourly closing basis, ideally the stop loss should be there. These are spot levels. Next one, we have a buy on Tata Motors, where we believe that a small short-term reversal pattern is already formed, and probably we believe that the pattern will break out on the upside. So a buy on Tata Motors for a target of around 280. Stop loss kept at 259.40 on the spot prices, and there's a solitary sell which is on ACC. I think the stock, entire cement space has had a good decent pullback / run up, and my sense is that the momentum is slightly waning now. There should be some little correction emerging here. So a sell on ACC for a target of around 1580 on the downside, keeping a stop loss at 655.60.
There are a lot of other stocks, for example, the likes of RIL, etc., which we want to talk about too. But Gurmeet, there are 2 companies and 2 large caps that I want to talk about. The first one is Lupin, up 4.5%. We were talking about it a couple of days back, that getting out or getting booted out of the Nifty or the Sensex need not necessarily mean bad news. In fact, it's been quite the converse for a lot of stocks. After getting out of the index is when fundamentally the turn around has come about and there's seen some buying. We're seeing that Lupin as well, coincidental as it may be, but the entire pharma pack is up and about. What are the views on Lupin particularly?
So here's, I think what is also happening, if you see, look around, there's a lot of domestic liquidity chasing pharma stocks. We have had 4 NFOs or mutual fund on healthcare, including the largest one of ICICI. If you also see the Vanguard Pharma ETF, which we discussed the other day, is outperforming globally the other broad indices as well. So I don't think so the rally is specific to Lupin. I think as I was discussing, it's like a value hunting pack. On the pharma space, on Lupin in particular, I'm not too positive as of now. I would like to see another quarter or so. There have been concerns both on the generic as well as the ANDA approvals. So I would like to see one more quarter come by. One area I'm positive on, two areas, sub-segments which I'm positive on. One is the diagnostic space. Because I think the market still in India, 80% is unorganized. So your Dr. Lal's and others will do very, very well. It's a very high margin business. The second is the CRAMS, which we have been discussing, which is the contract research and manufacturing and synthetic and custom synthesis. So those are the two segments I am more positive on, something like Divi's Labs and something like Dr. Lal Patel. US generics, domestic formulations, maybe another quarter or so before getting into it.
Okay. Some questions that have come in, and Gurmeet, it's interesting how the HDFC twins have largely been underperformers in the last couple of months, at least, if not longer. What about HDFC? Housing finance as a pocket, the 6, 7, 8, 9 months, the last 3 quarters haven't been the most positive. Is there merit in going out and investing in HDFC? It's been perennially a wealth creator. Does this lull, both time and price correction, give one an opportunity?
It is extremely. If bank happens to be a top holding as well as a top weighted stock in most of the model portfolios we engage with clients. I think there's been a lot of news around HDFC, and I think whether it's related to Deepak Parekh, whether it's been related to the exit of Paresh from the bank, and I think these are good times to get into these quality names. They are very expensive, 5 times, 6 times book value, and even if you see on a valuation, even at those levels, they aren't really cheap. So somebody who wants a 15% kind of a steady compounding, I think HDFC twins are a add at any level. Any correction again is an opportunity, and HDFC has, I was reading the other day, HDB, which is their, the HDB Financial Services. The market valuation is 90,000 crores. And to me, that that's not really reflected in the price. So one is the inherent earnings growth, inherent business model which grows steadily. Second is a lot of value unlocking, with something like HDB and other holding companies.
Okay, that's the view coming in on the HDFC companies. Just wanted to mark few stocks, and we know that the ID pack is doing pretty well, but pull up something like Saxoft. That's now up almost 10% in today's trading session. And also, if you could just pull up, can you pull up Saxoft? The intraday chart will tell you what the current gains are looking like right now. It's up 11%. And besides Saxoft, you've also got Nucleus Software, which is up almost, which has gone up 14 to 15%. The intraday, that's Saxoft for you, up 11%. Nucleus Software is now trading with good amount of gains. In fact, the stock's gone up on pretty good volumes today, almost 3.5 lakh shares vis-a-vis 13,000 which were traded in yesterday's sessions, and the stock's gone up in the last 5 to 10 minutes of trade. Gurmeet, we've discussed the large cap ID companies multiple times, and even the known mid cap ones from the likes of Mindtree and IT Tech, which have been going up. What about companies like Nucleus? Saxoft, actually, I was just checking the valuations. They derive all of their revenue from the export market, so rupee depreciation definitely working for them. And even if I look at the 1-year multiple, it's just trading at 10 times.
Yeah, attractive. Gurmeet, agree with you. Also, as I said, in mid caps, I think the currency plays a bigger role. I think for larger names, the contract repricing in today's environment happens very quickly. So a rupee tailwind at best could boost 1 quarter revenue. So Nucleus could be a good call from a maybe a tactical perspective. I think the bigger thing we are recommending to client is to look at technology as a comprehensive bit. Maybe look at some ETFs which have equal exposure to India and overseas. So we've identified some places there where India, we do not have any listed space. We technically have no listed play on cloud. We hardly have any listed play on social media. We have, again, very limited listed play on content, on AI. So there are a lot of portfolio ETFs which give you that play, for investor base out there. So we have been recommending a lot of technology ETFs for client, which is 50% domestic and 50% overseas, and you can play on the likes of Netflix or a Twitter or a Facebooks of the world.
That's interesting, Gurmeet. I think we should have a detailed conversation once on ETFs in India, because that's a market I believe not all the retail investors look at currently, but definitely it's growing thick and fast. Let's just get some technical views going on a couple of the stocks which have gone up. Welspun India is up 9% in trade. Manav, on the charts, how is it this one? How's the stock looking in the last 1 month? It's given good returns of nearly 30%.
Yes, in fact, if you look at this chart on the weekly, monthly perspective, it has seen a very good base formation and a breakout which has happened. And after a good long time, the prices have managed to close above both its long-term 100 and 200 EMA. And previous couple of trading sessions, the volumes have also seen a very good surge. Maybe at the current levels, the risk-reward ratio would not be favorable for any fresh entry. But anyone who's holding onto this stock, I think one can still expect another further upside of 15-20%, but a fresh entry could only be initiated if the stock prices come close to the support levels of 70. For any positional trader, 66 to 65 could be a good trail stop loss one can maintain for high targets.
Okay, that's the technical call coming in on Welspun India. I think another beneficiary of rupee depreciation, considering they export fabric to the other countries. Pull up Tata Motors among the Nifty constituents. It's up almost 3% in trade. Gurmeet, from the auto pack, I know you're a fan of the consumption space. What about Tata Motors, which has been underperforming in the last few, not last few days, I would call it, but in terms of financials too, it's been disappointing. But the street still has a positive view, and I believe we've spoken on this, but do you think these levels are attractive now and the stock's bottomed out?
Yeah, I think it's attractive. We might have another quarter where the JLR numbers may be a little weak, which could be this quarter. But as I said, I have friends who are into this trade, so I'm seeing a huge improvement in secondary sales on the passenger vehicles for Tata. Commercial vehicles is doing well. So as we discussed the other day, just 1 quarter more, or maybe 2 quarters more, and one stable quarter, and you'll see a pickup. So top tactical call on Tata Motors. Even if you look at the July numbers which have come, model wise. If you see another one which I like is Maruti. If you see the top 10 selling models, the top 6 are Maruti. So even Maruti from the high, I think, is considerably down. And once the Gujarat plant comes in, I think the average waiting time for their top selling models will reduce from about 5-6 months to about maybe 45 days to 60 days. And that marginalization of shares or shifting of the order which was happening to other models like Amaze and Cretas and some of the others will come down. So extremely positive on both Tata Motors and Maruti.
Okay, let's also get a technical view going then on Tata Motors, which is currently sitting at days high. Sarvendra, on the charts, what do you make of the 3% move that we've seen?
No, fairly good, I think. After quite a few months, I think after 3 months, and we had a brief positive close in between. So essentially, I think we have been falling for the last 10 odd months on Tata Motors with 2 small green bars in between. And this is the third time that we are trying to now close after a 10-month decline into the positive. I would read well into this because the overall monthly patterns also look bullish. So anybody wanting to take a positional bet as well can look at Tata Motors for a 6 to 12 month kind of a delivery trade as well. And in that case, targets would be much higher. But in fact, today only we have initiated a call here, and we have shared that call with just now also. And we believe that in this move, purely from a trading angle, you should be looking in for our target around 280 to 85 on Tata Motors, and keeping a suitable stop loss. But anybody having a 6 to 12 month kind of horizon, I think this stock could actually pull back towards 330, 350 also. So I would say it's a delivery buy and hold as well.
Okay, Gurmeet, let's talk about 2 names, or maybe both names in the same family. Extremely expensive. People don't mind holding to them right now. But Page Industries, Britannia, in a manner of speaking, birds of a similar feather. Expensive names in the consumption space, doing rather well the last few quarters. Would you go out and buy them?
Yeah, I'm of the opinion that you should look at segments and sub-segments where it's a non-zero sum game. And by what that I mean is that the market itself is expanding with new players coming in and with lifestyle changes. So coming to page, the entire innerwear market in India for men innerwear is about 1.5 billion. And for women innerwear is about 3.5 billion, which to me is can probably grow 5x. And Page Industries being being an exclusive licensee for Jockey International, they just got Speedo on board, which is basically more into swimwear and sports gear. I think this market is going to explode. So my view is this entire innerwear market could potentially grow 3x, 4x. And within this market, you have Page, who at whatever level it is, still has about 5% penetration. So I think to me, this is a multi-year growth, story, especially when it comes to, innerwear. And it's a segment where not many people understand what is needed. You need to be really good, and the messages have to be very subtle. So it's not everyone's, cup of tea to get into space and immediately start commanding a premium.
Okay, that's about Page Industries, but what about the biscuit maker Britannia? That too is trading at very high valuation.
Same thing, if you see Britannia, in terms of revenue share, it has about 30% of the revenue share of the industry. So if you see the composition, 80% is biscuits, 15% is your cakes and rusk and other, and the 5% is, the other businesses, which include some of the dairy products. In the Hindi heartland, which is where while its revenue share is about 20%, its volume is 1/5 of Parle. And I think since I come from a distribution background, we're seeing huge initiative to go deep down into rural areas. Their direct distribution outlets have gone 2.5 times. Also, we are seeing a shift from the entry-level biscuits to cookies and cream biscuits. So which I think will be very, very, both earning and volume positive for Britannia. And again, same non-zero sum game. I think the entire industry is hardly about 40,000 crores. And I think that will pick up, substantially. It will go very, very fast. So it's a long-term buy for me, something I would like to hold for maybe 8 years, 10 years.
Wow. Okay. I hope a lot of people have that patience and that vision as well to hold on to stocks for such long periods of time. Gurmeet, take a moment to thank you for joining in today and giving us that perspective. Really appreciate your time today. That's the view from Gurmeet Chadha. Okay, move on to the chart of the day. The rupees breached 71 to $1 for the first time ever in trade. Today, it also caps what's going to be the sharpest monthly fall in 3 years. Saloni Dhanuka is here to tell us more about it. Saloni.
So if you see Indian rupee today, it has extended its depreciating trend for the third straight day, and it is now on track for its biggest monthly drop in nearly 3 years. If you see in 2018, it has dropped particularly in August over 3.5% versus the dollar, and this was last seen in September 2015, wherein it dropped nearly 3.7% versus the dollar. The rupee has dropped over 3.5% so far this year. After what we have seen today, it marked its all-time low of $70 in the morning trade, and it has been the worst performing Asian currency on a year-to-date basis. It has declined over 10%. However, for today, Indian currency is Asia's second worst performer after South Korean won, largely on the back of strong dollar overseas and a large sharp sell-off that we have seen in other emerging market currencies. However, it is on track to depreciate for the 7th straight month in August, which will be its longest losing streak in nearly 18 years. And we spoke to RBL Bank. They expect the home currency to touch 72 per dollar mark in the near time soon, and they believe that the current currency pressure will make a strong case for RBI to raise interest rates in the tune of nearly 50 basis points in the next RBI policy. Back to you guys.
Well, thanks a lot for that, Saloni. So, well, that's the currency really, and I think the currency is probably one big factor which is driving up the rupee sensitives in the session today. Well, it's exactly the opposite for the Nifty Metal Index, though, which has seen, so while the currency has fallen so much, the Nifty Metal Index has seen a sharp rally in this month gone by. The question mark only is all the index constituents trading in the green. Nick is here to take us through those details in just moments from now. Keep in mind, it is arguably one of the better performing months, the current month, for the Nifty Metal Index. Do we have Nikki? Yes, I think we do have Nikki Mirchandani. Let's go across to her. Nikki.
Hi Neeraj, it's going to be, August has been a good month for Nifty Metal Index, as you just mentioned. In fact, it's all set to clock the best August since in the last 5 years. Look at the returns right now. The Nifty Metal Index is sitting with returns of around 9.3%, which is the highest that we've seen since 2013. Notably, it's also the third August in a row for 3 years now that the index has managed to close on a positive note. All the constituents, as you mentioned, 15 components of this index have managed to close in green. If you look at the top performers, we have Welspun Corp, Nalco and JSW Steel. For obvious reason where the business outlook for Welspun Corp has gone down well. Nalco, of course, is because of the rupee depreciation and sensitivity towards your alumina prices. JSW Steel on inclusion on Nifty 50 index, and you on the underperformer side you have APL, Apollo, Moil and Vedanta. But then do bear in mind the fact that all of them have fetched a positive return for the month of August. So clearly it's been a good performance for the index as a whole. But if you look at the return potential, we're looking at a good return potential coming in from Tata Steel. Now also do bear in mind the fact that Tata Steel has corrected good enough on YTD basis, and it's a return potential of close to 45% that we're looking at. APL Apollo Tubes, as per the Bloomberg consensus rating, again fetches a good return, has expected a good return potential of more than 50%. Moil and Vedanta too, analysts which are bullish on the counter expect the stock to fetch a return of more than 30%.
Okay, Nikki, thanks a lot for bringing all those details with regard to the Nifty Metals Index, and clearly a lot of other factors working in favor of metal stocks globally. Shut down in China, some global tailwinds also seen for this sector. But as we slip into a short break, veteran investor Warren Buffett will keep buying stocks irrespective of where the markets stand right now, and that's because he's sure they'll be worth quite a bit more in the next 10 years. In an exclusive interview with Bloomberg Television, Buffett shares his investment mantra. Listen in.
The stock market is really on a record tear, I think it's fair to say. You've always drawn the distinction between price and value.
Right.
Are we seeing a run-up in value or in price?
Well, value gains from year to year. I mean, as companies retain earnings, stocks basically, if you own a business and you plow back a good portion of your earnings into building the business, you're going to have something more valuable on average year after year. Now, sometimes the market reflects it, and sometimes it's crashing for some other reason or whatever. But the stock market builds in value, underlying value from year to year. And it's grown a lot. I bought my first stock when the Dow was just under 100 when I was 11 years old, and look where it is now.
Well, look at where it is right now, because one of the things you take a look at to measure it is the total value of the stock market compared to GDP.
Right.
And if you look at that graph, it's at the high point. It's the highest it's been since the tech crash back in the late 90s, as a practical matter. Does that mean we're overextended? Is this a better time to be fearful rather than greedy?
I'm buying stocks, but I'm not buying because I think they're going to go up next year. I'm buying them because I think they'll be worth quite a bit more money 10 years or 20 years from now. And I don't know whether they're going to go up or down tomorrow or next week or next month or next year. I do know they're good businesses. And in relation, you have to measure investments in relation to each other, and your alternative for most people is fixed income. And you get 3.02% or something like that for 30 years. So would you rather invest in a company that's earning 15 or 20% on their invested capital and compounding, or would you rather have a 3% bond which can never earn more than 3% while you own it?
At the same time, there are some stocks that are bargains, good bargains from your point of view. When the market's up this high, that means values have gone up quite a bit. Yeah. And you're sitting on a lot of cash, $110 billion. As a practical matter, don't we have to have more fear in the marketplace before you're really deploying a lot of that cash?
Well, I love it when there's, I don't love it for the country as a whole, but I mean, that creates prices that make me want to shovel out the money as fast as I can. But we've been shoveling out money anyway, and it's not as attractive as obviously when I was buying in 2008 and 2009, and that wasn't as attractive. 1974 was the best year for buying securities in my lifetime. That'll happen from time to time, but you can't sit around and wait for it. You're never going to catch the bottom anyway, and and everybody will be terrified at that time. We keep buying as long as we find something that's attractive to us, an attractive business at a reasonable price. And I love it if it's a really juicy price, but I still keep buying.
Dreamers. They're everywhere. You've met them, been to school with them, worked with them. They didn't seem different. Yet she's the one who surprised everybody. His crazy idea actually worked.
They are no different. They are you. When you take a chance on yourself.
These are the dreamers who found a way to run the engine of the world. These are the entrepreneurs. There is no formula. There is no right place, right time. There are no overnight successes.
But there is toil, there is preparation, and there is tenacity.
There is no end of the road, no obstacle large enough. There's just the vision and the heart that won't give up.
Because Agons of business never stop.
Agons of business never stop. Only on Bloomberg Quint.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Back with Countdown right here on Bloomberg Quint Live. 27 minutes or 27 and a half minutes left for the markets to shut shop. Just take a quick check yet again at what the European markets are doing. At about 2, they have were down close to 0.5% to 1%. The weakness still persists, has in fact accelerated a bit because the CAC is now down 0.75%. The DAX is down almost 1%. So the world isn't quite a very happy place. Likely to start off lower. Dow futures flattish in the session today. Our markets too very, very flat. Let's first find out what's made it to Yash Upadhyay's list of the Fab 4 stocks of the day. He joins us right now to talk about those 4 key movers in the session today. Yash, good afternoon. What's made it to your list?
So the Nifty Pharma Index, that is up almost 3%, powered by strong gains in Dr. Reddy. That one's up about 5% today after Bank of America, Merrill Lynch came out with a report wherein they have maintained the buy rating on the stock, but have raised the target price to 2,900 rupees. Now they believe that a strong pipeline of complex generics as well as specialty products that offers comfort for them in the key US markets, as well as a lot of near-term catalysts such as facility approvals and the filing of complex LAIs, all of those factors playing out for Dr. Reddy's as a reason for the target price hike. PNC Infratech has surged more than 5% today after the company received a big order worth close to 2,000 crore rupees for an EPC contract from the Maharashtra Road Development Corporation. So that one's in focus. The persistent weakness in the Indian rupee, that is helping the IT stocks, or something like a Mindtree, that's up about 5.5–6%. You could also look at Tech Mahindra. We saw Rupee breach the 71 mark today, so that is helping the IT players. And lastly, we're looking at Wellspun India. It has been buzzing for the last 2 trading sessions. It's gained more than 12% in that period, with volumes too coming in at nearly 6.5 times the 20-day average. Back to you.
Well, thanks a lot for that. Yash, so some names out there, and Welspun India in particular, and actually any of the exporters somehow have done really well for themselves.
Even Indo count has gone up. These are the textile exporters which are now moving up in trade. Yesterday we had Kitik's garments also which went up. So definitely rupee depreciation is creating tailwinds for all these export manufacturers.
In the minds of the investors at least, if not for the business at large. But well, let's talk about all of that and more with Rajesh Kothari. He's Managing Director at AlfAccurate Advisors, joins us right now on the show. Been a while, Rajesh. Thanks so much for taking the time out and speaking with us at Bloomberg Quint. This is Neeraj here. Good afternoon. What have you been doing, Rajesh? Are you
Hi, good afternoon.
Are you taking some chips off the table, maybe because the markets might seem a bit stretched and you might believe that there could be some bit of a correction coming in and waiting for an opportunity, or are you fully invested right now?
Well, Neeraj, as you are aware that we invest generally over a period of time, so we have been in an investment mode, and there are many, while one part of market surely is at lifetime high, there is other part of market which I would say two-third part of market which is probably 20-30% lower from their recent 52-week highs. So we are using it, correction as an opportunity in that part of the market, and we are adding to the companies which fits our what I would say investment philosophy, which is 3M: market share, size, market share, and margin of safety.
So Rajesh, okay, so that point is well taken, but I'm just wondering if you believe there is a tactical opportunity here. I mean, with the presumption that you are of the opinion that the markets could see a bit of a correction, maybe due to global factors or local factors, or are you fairly sanguine about the prospects from now until the end of December?
I think, Neeraj, what we need to understand is that what is meaning of market. When there are only 3 stocks which have contributed 50% of the total Nifty gain in last 12 months. 2/3 of BSE 500 companies have underperformed BSE 500. What is market? So, one is Sensex and Nifty, which are the, what I would say, which just gives the overall color of, where India is heading towards in terms of the indices. But the underlying, breadth and width of the market has actually not done much. So what I'm telling you is that there is actually a very big opportunity on other side of market as well, which is 2/3 of market, mind you, and that part is very, very attractive because that part is not participated at all. So there is a time correction and there is a price correction which has happened in many of the sectors, in many of the companies, best of the companies, and we are using therefore that as an opportunity to add those companies in our portfolio.
So you are confident that some of your ideas will do well, even if the benchmark mother indices were to come off, right? I mean, if there is a correction on the global front, or if the Nifty corrects because of whatever reason, you believe that your ideas will stand those pressures well enough.
Yes, basically I think, as you are aware, in the long-term market is nothing but mirror of earnings growth. Last 7 years, Sensex has reported 7.5% compounded earnings growth, and Sensex has reported 8% market cap compounded growth in last 8 years. So in long-term market is nothing but mirror of earnings growth. In 3 to 5 years time frame, if you believe the companies which you are buying, they are going to deliver 18 to 20% plus compounded earnings growth, then, I think those are the stocks which fits your bill.
Okay, can't take my eyes off. Actually, the IT counters now. First, it was Pharma. Pull up Mindtree's intraday chart. Pull up Tech Mahindra, NIT Tech. All of them currently sitting at days high. And Nifty IT also at days high. Mindtree up 6%. Remember, these are fresh highs for this company. NIT Technology is up 3.5% in trade. And also something like Tech Mahindra, which has been inching higher for the last few trading sessions, continues to trade on the higher side, 4.5%. Rajesh, hi, good afternoon to you. Let me talk about a theme which everybody's been discussing of late, and that's rupee depreciation, which is creating tailwinds for a lot of the sectors. And today we can see it on the screen for the usual beneficiaries, that's IT and pharma. Well, you said you guys at AlfAccurate, you guys invest across around the year. So what are you doing with these sectors which have already done well, especially the IT? Is it time to do profit booking, or one should wait it out a little more? Do you see more returns coming in from the IT space?
I think both these sectors, IT as well as healthcare, both these sectors, they require more, bottom-up approach rather than top-down approach. So currency, depreciation is probably just, adds a few bips to your margins, but that cannot be your, what I would say, the reason why you are buying these companies. So we are fairly positive in both this space, and we have been adding from last about 4 to 6 months, few names which are the leading players in this sector, and we believe that the worst is over for the sectors, and I think particularly in healthcare sector, the pricing erosion what we have witnessed in last 2.5 to 3 years, particularly the US side of the industry, that kind of a, what I would say, decline, the degrowth in pricing, you are not going to see over next probably, after 1 or 2 quarters. So pricing will stabilize, particularly in the US market, the degrowth will be arrested, and the domestic market is anyway doing well. On top of it, the companies which have received the approvals from US FDA, the new product launches and new product approvals, it is those factors which will drive the company's profitability over next 2 to 3 years. So I think that this space should do reasonably well over next 2 to 3 years.
Okay, and you also said that 2/3 of the broader market stocks are still seeing some cuts if I were to look at them on YTD basis. Anything in the broader market now currently, Rajesh, where you guys are finding some value at current levels?
Well, there are many pockets where we are finding the value. Few auto ancillary names, particularly in the mid-cap size, we clearly see that the earnings growth has been very, very strong, and we are getting positive. Anyway, we have been bullish on this space from quite some time. There are few names into the specialty chemical where we are finding it at a very, very attractive levels, considering again kind of a oligopolistic positioning of those players with a very strong balance sheet, kind of a debt-free balance sheet with a good return on net worth and good return on capital employed, and underlying strong earnings growth again for next 2 to 3 years. So there are pockets in the market, many such opportunities across auto ancillary, across specialty chemicals, few opportunities even into the consumer side of it. Yes, the market cap is going up, but so is the profit growth. So consistent story will continue to do well probably over next 2 to 3 years. So these are the pockets where we've been investing, I would say during last 3 to 6 months.
Interesting. Rajesh, what's the view on, I mean, I'm not asking for a buy or a sell here, but what's the view on some of these very expensive consumption names? I'll include a page there, I'll include a Britannia there. I actually will include the FMCG staple names as well, the likes of HUL, etc. Do you reckon that a price to perfection, or can this high valuation multiple last for a bit longer?
Well, I think, Neeraj, while valuation remains expensive for these names, but we need to keep in mind that these are the structural stories, and importantly, the volume growth, underlying volume growth of many of these businesses has been pretty robust. And I think is going to further accelerate as we move into next year, because there is a lot of, I would say, spend by government in an election year that also helps the overall disposable income to go up. So we are pretty confident, we are still holding these names because just on valuation, there are many companies, probably on historical, I would say, investment framework, they may not meet your valuation criteria. But as the growth accelerates, then the valuation gets justified. So say, for example, one of the largest, I would say, consumer-facing NBFC, which is probably at its lifetime high, has reported, I would say, 55% compounded market cap growth in last 10 years. So the number looks very expensive, that 55% compounded market cap growth, 4.5 times price to book value. But if you look at the profit growth of this NBFC, has been also 56% compounded in last 10 years. So market cap growth and profit growth are exactly in line. So from that perspective, on PEG basis, price to earnings growth basis, the valuations are still, I would say, reasonable, provided the earnings growth, what you are factoring for these companies over next 2 to 3 years, they keep delivering on these numbers.
Rajesh, before we let you go, what's the fund allocation like in terms of broader market and large cap? Where are you looking more of allocation now, considering the sort of returns that we've seen from both these segments?
Well, we strongly believe that it is a multi-cap approach, which always, I would say, balanced approach. Typically, we have 40 to 50% of our portfolio in large cap. When I say 40 to 50% large cap, I'm talking with reference to new SEBI definition, and the balance is in mid and small cap, and of course some cash levels. So it is a very, very balanced approach, which is important. Number two, another very important point is, instead of looking at market cap, please focus on the profit size of the companies. Because in India, there are only 450 companies, which makes 100 crores plus profit. So to give you some insights into our portfolio, 45% of the portfolio companies have a net profit in excess of 500 crores. And 32% of the portfolio companies would have net profit in excess of between 100 to 500 crores. So I think it is profit size which is very, very critical. If you buy the company with a reasonable profit size, then the market cap will follow, So that is basically, what I would say. I recommend to the viewer's perspective that keep a balanced approach between large, mid, and small.
Okay. Thanks for your views there, Rajesh. Thanks a lot for joining us this Friday and taking us through what you feel can happen going ahead. Have a good weekend. Okay, that was Rajesh of AlfAccurate, clearly advising the viewers have a balanced approach while investing, whether you're putting your money in large cap or mid caps. But it's 3:15. We've seen some recovery in the markets. Nifty is now in the green. Let's tell you what the dealing rooms are recommending today. We've got Yatin Mota and Darshan Mehta right here with us with your channel checks. Good afternoon to both of you. Darshan, over to you first.
Yeah, so if you're looking at the markets at this point of time, one of the stocks that's been doing well is Tata Elxsi, in which there seems to be a little bit of movement on the higher side. It's up almost 2% in trade. Some of mid-cap IT as a pack is doing well in today's trade. You're seeing that how Hexaware has moved, how Mindtree has moved. So most of the mid-cap IT stocks, and Tata Elxsi features one of them. Tata Elxsi is the first one. Bajaj Finance surprisingly has had a bad day today, almost at levels of 3,000 a couple of days ago and back to 2850. Some of the HNIs are now taking a little bit of positions post the correction that the counter has offered. So that's the second stock that dealers are talking about. And finally, two mid-cap stocks in which there is HNI accumulation. One of them is Heikel, which is up almost 8% on high volumes, and Vimta Labs another 2% up in trade. So that's what's been spoken about. But Yatin?
Well, PNB, Darshan, that is one stock in the PSU space which is expected to do well according to dealing rooms. In fact, on the basis of FNO trends, dealers do indicate a BTST kind of a strategy, which is buy today, sell tomorrow in the future and options space. Apart from that, Tata Motors, of course, we have the monthly numbers which will come on Monday for August. And Tata Motors, that is a stock in focus, 3% up for that one. Dealers indicate that domestic funds are set to be lapping up shares at the current levels. And finally, in the cash segment, do watch out for Global Spirits. That is one stock in the alcohol and brewery space wherein they have analyst meet slated, and ahead of that the stock has already moved almost 10-15%, and HNIs are said to be buyers in trade. So this is one stock which could be in focus suppose their analyst meet concludes. Probable inputs on growth is something that the investors are watching out for here.
Watch out for that. 6% higher today. Did I hear you say there is an analyst meet today?
Yeah, so there is an analyst meet which is slated for Global Spirits. Okay. And ahead of the stock has surged some 10-15%. So yeah, wow. There is a lot of expectation for the meet.
Let's wait and watch. Thanks a lot for that, Yatin. Let's focus a bit on the charts. Manav, Chopra, Global Spirits, and if you don't track that stock, then United Spirits, because that stock is down about 3% in trade.
If you're looking at the charts of Global Spirits, we have seen a good move happen into the stock recently, and from the spirit space, I think UBL is one stock which definitely stands out. We have already seen a good breakout that has witnessed recently on the weekly and the monthly perspective. The prices are consolidating, but has an important support close to the levels of 1330 to 1350 on a positional long-term basis. So I sense the stock still has a good room on the upside, and looking at the current momentum, I think after a short-term consolidation the prices will see a breakout on the upside and eventually see rallies towards the levels of 1450 to 1480. So I think if I have to take a bet at the current levels, keeping in mind the risk reward, I think UBL definitely stands out.
Sarvendra, can you pull up the chart of InfoEdge and tell us how does it look? It's had a sharp up move in the last 10 minutes of trade.
think I'll have to, I can't that chart right now.
Okay.
You'll have to give me 5 minutes.
Sure, I'll give you that. In the meantime, Manav, Info Edge, if you can, and if not that, then Hatson Agro.
Looking at the chart of Info Edge, definitely the stock has been in a very good momentum and has continuously been forming a series of high tops and bottoms. And looking at the current levels, I think this momentum is definitely going to continue. It has some important support close to the levels of 1600 on the lower side. But what it clearly identifies that the stock has not gone below 20 DMA since past 4.5 months, which clearly indicates the strength the stock is having and the momentum. So keeping that in mind, I think a good upside of another 15-20% will not be ruled out, but eventually this stock takes its own time. So keeping in mind at least 2 or 3 months view, 15-20% is definitely a call that one can take into this.
Okay, that's a sharp surge that one is seeing on Info Edge in the last 5 to 10 minutes of trade, but it's 3:20. Let's get you some closing strategies from our experts. Sarvendra, I'm going to come to you. Any BTST or any STBT for Monday's trade?
I will go with firstly, I think Info Edge is Naukri on NSE, and that's the big confusing part for BSE and NSE codes when they are different. I think both the exchanges should sit down together and get those sorted out. Coming to Bajaj Finance, I think STBT on Bajaj Finance is what I would recommend, and I would say that I would short sell this one for a target close to around just a sec. I will sell this one for a target close to around 28.10, 28.20 for Monday, and I would keep a stop loss at 2876.60 on Bajaj Finance spot and take an STBT there.
Manav, what about you? Your top closing strategy?
Yes, I have 2 buy calls, both are BTST. My first call is buy on Reliance Infra. Actually, there is a good momentum which has been built up in the ADHG pack. I have already given a buy on Reliance Capital for a medium-term perspective, and Reliance Infra would be a BTST call, purely, looking at the volumes. There has been a good breakout in terms of price and 50-day average volume. So clearly indicates that there is a trend change or a reversal which is happening on a high time frame, and the momentum looks quite positive. 470 is the lowest stop loss for Reliance Infra. Expect an upside target of 495, and my next call will be a buy on Tata Motors. In fact, the prices are forming a good base on the intraday levels, and looking at the support zone, how the volumes have built up and a base formation with a breakout on the daily perspective, I think it's a good bet that one can initiate not only for the BTST basis but also on a positional. So a stop of 263 can be placed on the lower side for an upside target of 280.
Okay. Some more stocks. By the way, Welspun India is now up about 9%, so really good going. But there are some viewer queries that have come in. One of them is on South Indian Bank. There's also a block deal, as Hormus, my producer, tells me, and the stock has inched up a little bit from those levels. But it's a very, from an investment perspective, I don't know if you really want to go out and bet on a South Indian bank. There are probably better banks available to bet on. So, frankly, if it's an investment query, then while we don't have Rajesh with us, but better banks available to bet on for sure. But from a technical perspective, Sarvendra, do you track South Indian Bank?
Yeah, I do. I think this is one bank which is kind of disappointed for the last years now. It's in this a range between a 16 to a 34, and that is what it has done as far as I can go back in history, and right from around 2011. So I think it continues to do that. 1 or 2 rupees higher, 1 or 2 rupees lower. That is what it does. But essentially, 16 to a 30-32 band is what it has been doing, and right now it is at the lower end of that band. So I would say if someone wants to take a risk on this one within the banking space, I think at these levels it's at pretty long-term support. So there's no harm taking some delivery-based positions here. This is not a trading stock, so that thing has to be very, very clear in anybody's mind when he's taking a position, that this is not a trading stock and he'll have to hold this for at least a 12-month plus kind of a perspective to have some percentage returns coming in here. But I would say if someone has to participate in banking, I think there are far better names there. I think Indian Bank, which is a call that also we initiated today. Even on a positional basis, if I have to say, Indian Bank has got good supports in the region of around 280, 300, and right now it's available at around 330. And if all goes well, I think for Indian Bank should be a 450 plus kind of a stock in the next 9 to 12 months. So I think there are better trades, and I would go with Indian Bank if I have to go into banking.
Okay, so according to Sarvendra, Indian Bank is better than South Indian Bank. The other stock I want to pull up is Pidilite Industries. That's now sitting at day's high level. It's surged almost 3% in trade, currently at 1175. Manav, with the move that we've seen in the last half an hour, would you take a bet here?
Actually, at the current levels, if you're looking, the prices have already seen a good move from its lows of 1020, and it's it's already seen a good move of 100 points. And moreover, the oscillators are also nearing its overbought zone. So I think it has an important resistance close to the levels of 1200, which definitely does not provide the risk reward. But anyone who's holding on to this position, I think it's a good time that one can look to book some profits at the current levels, and probably if the stock declines back to its important support is when you can initiate, as there is no appropriate risk reward for any short-term trade.
Okay, book profits into Pidilite if you've bought this stock. Manav, one more stock, Reliance Industries. Would you recommend buying at lower levels, considering in the last 3 sessions we've seen some profit booking kicking in here?
In fact, the stock has seen a good decline in last couple of trading sessions and has important support around the levels of 1180 to 1200. So I think there is another room of 3 to 4% decline, which is quite possible. So once if the stock tests those support zone, and if we see some sort of a halt in the decline, is probably then one can look to initiate long positions. But as of now, I think one can just stay on the bay and let the stock come near the support zone for any fresh entry.
Okay, interesting. What else is doing well in the last few minutes of trade? Remember, we were speaking about how the stocks like the Info Edge and a few others have done well. I think amongst the other ones, Titan has had some move in the last few minutes of trade, so pull that stock up for our viewers, and just some upticks that have come in there. CCL Products has had some uptick, and Thermax has shown a little bit of an uptick from where it was. So good going there. The star though has to be Radico Khaitan. Knocking on the doors of 500 now is Radico Khaitan. Brilliant move. We're talking about Global Spirits being one. This one is no different. Another fabulous move. Coming on this Manav actually, Radico Khaitan.
Purely, this stock has been in a very good momentum, Neeraj, and a good outperforming stock. Most importantly, the stock is closing above its all-time highs, and on a monthly, weekly closing, it definitely indicates that there is still this momentum is likely to continue. But I would recommend a trail stop loss of 480 in case if anybody who is holding on to the long position to the stocks. I think an upside of 550 to 580 cannot be ruled out, but the best strategy could be to have a trail stop loss. And after a good time, the oscillators also on the weekly perspective have entered into a buy mode. So I think there is still some more steam left on the upside. Eventually those targets are likely to be achieved.
Okay, more steam left for Radico Khaitan on the upside, and markets too have recovered quite a bit from the lows of the day, and just under 3 minutes to go for the markets to close. So let's head across to Neeraj to find out how exactly today's closing is panning out. Neeraj, it's been a good week. I think the start off was good. Just in the last 2 to 3 sessions, owing to the expiry, we've seen some profit booking coming at higher levels.
Yeah, I mean, can't complain when you're perched at about 11,700. I guess, Naveen, that's the point that both of us are trying to make. The Nifty Bank too, after starting off low, then going up a bit, ending flattish, so no big complaints. Remember, the world isn't a particularly happy place today, at least the European markets are not. Mid caps and the small caps, remember in yesterday's session, while the indices started off or went low, the market breadth remained very positive. In today's session, that may not have been the case because we've interscrossed a number of times, but still, or close about 1/3% each for the mid caps and the small caps. The 500 about 0.2%. It's not a very bad day. The first day of the new series usually tends to be a bit quiet as well, so volumes I doubt will be really very high. But let's bring up what's happening on the index first, and exporters all the way. Tech Mahindra, Dr. Reddy's, Lupin, HCL Technologies, Sun Pharma, Cipla, the clutch of pharma and IT names which have done very well is very, very long, and the gains are fairly solid too. What's not done well though? Yes Bank, 5% on news, but Reliance, the last 3 days has corrected and corrected quite strong. And then the last couple of sessions, the Bajaj twins, particularly Bajaj Finance, has seen a bit of a pullback. Autos today with M&M, Maruti and a few others haven't had the best of days. ICICI Bank bringing up the list of the top 10 losers, down about 1%. So all in all, rate sensitives a bit quiet. Exporters very, very strong. Maybe the defensive bent of the market in addition to the rupee weakness all aiding that. Navneet, how do the mid caps look like?
Not bad, Neeraj, considering the recovery that we saw in the second half of the session, and market breadth was also just about even, Stephen. But clearly, the day belonged to the IT and the pharma companies. So let me start off with some, mid-cap or small-cap IT companies. Saxsoft was the one which surged in today's trade, 8.5% higher. Nuclear Software was the other one which had a good session coming about, up 13% in trade, and also something like Datamatics that went up in the second half of the session, closing the day finally with gains of almost 9%. And not only that, Mindtree, every time you see a correction for stocks like Mindtree and an IT tech, there is buying coming in at lower levels. Once again, fresh highs for both these stocks and fresh long positions seen. Tasty Bites, surprisingly, in the last two sessions have had a good buying, momentum coming by on back of good volumes. It's not a very liquid counter, but still the volumes have been going up, 8% higher for this one today. And also something like Welspun India, which derives most of its revenues from the export market, maybe rupee depreciation is creating a tailwind for this one, and Hudson Agro also doing pretty well in the last half an hour of trade. Well, those were the gainers, but on the losing side, you had stocks like United Spirits. I think from the word go in the morning, it was not doing that great, and some bit of recovery towards the end, but still finally closing with cuts of 2%. Also, stocks like Tata Communication and something like Max Financial didn't have a great day. Balkrishna Industries, which up till now was going up and had a good last 1 month or so, saw some bit of profit booking, at least in the last two sessions for this one. 3.3% lower is where finally the closing is coming about.
Well, so all in all, not a bad day for the mid caps and the small caps. The large caps very, very quiet. What about the week though? We should pull that one up as well. Let's get the MRR function for the week and just see how the markets have done for the week gone by. Well, about 1% higher again for the Nifty, so not bad. Yes Bank brings up the list of losers though. Let me know what the losers, now we can bring up the gainers. Yes Bank brings up the losers list, 8% in large portion due to what's happened today. But remember, in the last 2 weeks or last 10 days, Yes Bank has already corrected about 10%. So keep that at the back of your mind. Bajaj Finserv about 4% lower, and Reliance Industries, I would reckon one of the principal culprits, down 3%. A lion's share to whatever little pressure that came in on the index. Aside of that, an okay list of losers. No big casualties, Nabi.
That's right, Neeraj. In fact, on the gaining side, I'll say there were a few laggards which have started to perform now. Something like Tata Motors, 4.5% for the week. Majority of the gains came in today. And also stocks like Power Grid and NTPC, they've been giving good returns, at least for this week. Remember, they are the stocks which have not done too well on Y2D basis. And UPL has had a great week. That stock's up almost 9%. But having said that, these are the Nifty constituents. Let's just also pull up the MR list for the broader market, be it mid-cap or the NSE 500, whichever our director can pull up. That's going to give you a better picture as to what happened in the broader markets, because we've seen, at least for the August series, some bit of bounce back was seen from the Nifty mid-cap index as well, which was up almost 6.5%. So this is the NSE 500 index. These are the gainers. Jayaprakash Power Ventures up 55%. Well, these are high beta counters which are basically going up on back of some news. Adani Transmission, Neeraj, I think this is the one we've been talking throughout the week on back of the Reliance Infra deal finally being concluded. That was up 34, and the surprising move that one saw for Bosch in yesterday's trade.
Yeah.
So good amount of gainers. Radiko Khaitan was the other one which we've been talking about.
Yeah, I think the one name that stands out in the losers list is Interglobe Aviation, Navneet, 12% lower, and just shows what's happened to the aviation pack, to be honest. Ever since crude has played a bit of spoil sport, these stocks haven't been able to recover, and multiple pressure points out here. Interglobe Aviation 12% lower. Jet Airways and SpiceJet too. SpiceJet, I saw the price after some time. I didn't realize the stock has sunk down to 78 rupees
from levels
from
of
150 or thereabouts. Yeah, it went up to 140, 150. from there all the way down to 78. That's been a sharp
similar
gap.
would be the case for Jet, which was somewhere 750 to now current levels of sub 300.
Yeah.
So,
but I mean, at least Jet has a few pressure points of its own, aside of just the normal business pressures.
Right.
In SpiceJet, we haven't heard any of those stories.
No news basically coming by.
No company-specific news.
Otherwise, the macros remain the same for all the three companies. Rupee depreciation and also crude prices going up. That's not auguring well, obviously, for all three. But no news in SpiceJet.
Yeah, and the stock is down to about 79 odd rupees.
It's a good idea. I think we should interact with the management.
Hopefully sooner rather than later. But anyways, final thoughts from our experts then. Sarvendra, how would this set us up for next week on the mid-cap index? How does the mid-cap index look like?
No, I think clearly today's the entire close has to be seen in respect to what the setups have been on individual stocks or their constituents. What I can immediately gather is over the last if you look at the last 4-5 months, I think we are still below the swing high of 20,238 as far as the Nifty mid-cap is concerned. Until that's not being breached, I think the overall movement could be more sideways to down. So my sense is that this bounce has to be treated with caution, because the large cap space has now started to show some chinks in the armor, and if that is the case, as we were discussing, there have been negative divergences in a slightly medium to long term scenario. There have been individual stocks which have been diverging in the bank Nifty as well. So my sense is that the next month has to be very, very cautious, and why I'm saying that August September cycles usually have been tricky. So either you have got big declines or you've got big breakouts coming into this cycle. So I think we are there on the cusp. So this cycle, it can no longer be that we are trading like this 150 odd point range every week. We will get either a big bang breakout out of this range, or we are going to have a sharp little correction. So I think September will have those answers, and we have to be very, very cautious into the first week of September.
Okay, Manav, what about you? What would your approach be? I'm sure the markets will be taking cues on Monday from the GDP numbers which come out in the evening today. But overall, looking at the setup, would you take any fresh trade on Nifty or on Bank Nifty, or would you wait?
Purely taking any trades on Nifty, Bank Nifty at the current levels does not really provide any risk-reward ratio. But most importantly, one needs to take a sectoral view. I think keeping that in play, I think pharma would be the space, and within pharma, stocks like Cipla, Dr. Reddy could be the stocks which could see a very good outperformance of another 15-20% on the upside. And most of these stocks are out of its weekly, monthly hurdles and are showing fresh price signals on the momentum parameters. Specifically for Bank Nifty, until unless we don't see a close above 28,350, I sense this consolidation phase would continue at least for next few trading sessions, and only on a close above 28,350 is when we could expect some sort of a momentum coming back on the index front.
Okay. Both of you, Manav as well as Sarvendra, appreciate you joining us this afternoon and taking us through your technical views in the market. Have a great weekend, and thanks a lot for joining us. Well, those were our technical analysts. Just want to address those flashes there on the screen. April to July budget deficit has reached 86.5% of the full fiscal year target that the government had laid down. And if you were to look at the absolute figures, April to July budget deficit currently stands somewhere about 5.4 lakh crore. I don't know if that means that we could just miss the fiscal deficit target which the government has laid down for FY19. But some important macro data flashing there on the screen, Neeraj.
Yeah, but I think at the start of the year we had mentioned that this shouldn't surprise anybody, and these numbers will only start looking very interesting over the course of the next few months as well. Special dividends would become the order of the day as well. Though SAIL, of course, has said that in order to pay it, we'll need to borrow from the market.
Yeah, that was surprising. They said we'll have to borrow. We don't have any cash in books to pay dividend to the government.
Yeah, so it's a bit of a pickle. But let's see how it shapes up. As we said, during the course of the next few months, it'll become even more interesting. But we'll bring up all those updates. Yes, I don't remember this number being at 86.5% so soon in the year, at least in the last year.
Yeah, and maybe a rupee depreciation, and especially the higher crude prices could be weighing in. I remember the last month, the trade deficit was also on the higher side.
Yeah. Well, I believe Veera Dugal will be writing something on this. So on the website, you'll have all the updates coming in on these numbers as well. GDP data today, of course, so keep in mind that'll come in a bit later on. All the updates will be available on BloombergQuint.com. For Countdown, though, from Navneet and me, the team that put this show together, thanks so much for watching and have a great weekend ahead.